Mic check 1 2 1 2. Mic check 1 2 1 2. This is not financial advice. I tell you a bunch of miss baby because it's about to get hot in the kitchen, family. I got some good news. If you've been looking to join the team and book a call with us so you could get my trades, we have the calendar back open. I look forward to seeing you in there, but let's talk about the video. I want to say, talk to a licensed financial advisor in your area so that you understand that trading carries risk, but you got to risk it to get the biscuit, baby. We talked about Opendoor Technologies. This is a $5.50 stock at the time of this recording. It's moving up 50 cents. It's moving down 50 cents. So it might be very volatile by the time you see it. And I want to make this clear. In my personal opinion, this is a stock that has not yet fully graduated to being just a straight up long-term hold that you don't have to watch. What does that mean? If you get into this one, you have to watch it like a hawk. Why? Because the manipulators are in this one, because the retail investors are in this one, because this company is not yet fully established to where they want to be, but there's a lot of money to be made if you are watching it like a hawk. If you're making any money with any stock, let me know in the comments so I can celebrate you, family. Any stock, any crypto, we getting busy. I just alerted the family to Opendoor a few days ago, and it's already up about 10%. I wanted you to watch out for some key levels, and I want to reiterate those levels right here. The $3 level is one to watch. Why? If it comes down there and then it goes into the twos, but then comes back into the threes, it's looking like we could go up. But if we break past this $5.80 level as well, and we could close out a day over that one, it's looking like we're going to push up towards the $7 range. So make sure you're paying close attention. And at the end of the video, I'm going to show you a specific play and how to actually go all the way through with it with a proper stop loss and a proper target for profit. That's going to be major and a major lesson for many of you. Again, hit the like for your boy. Let's try to get the video over 1,000 likes. This is what's going on with Opendoor right now. They climbed 16% after I alerted everybody about it. Why? Because the home sales beat the estimates. Wall Street and economists, they thought that it was going to be significantly lower. And now that the stock price is moving up, it's actually up so much, it's hitting a 3-year high. Let's look at the numbers. They said that sales for new single family homes have reached 652,000 in July. That's over 20,000 more than they expected at about 630,000. Economists didn't know that people was buying houses the same level that they're buying it. But I had told you, and if you remember what I said, put an R in the chat. And I'm going to reiterate that. And I mean the letter R for remember. This is what I had told you. This stock is going to be able to move. Why? Because people are going to buy more houses if the interest rates come down. And what happened? This is exactly what we see moving the market in this stock in particular. It's not about being able to tell the future. It's about being able to see all of the cards on the table and being like, yeah, that's the one right there that we're going to be able to use to win this game. Let's look at what's going on with it, because this is why I want you to be able to understand you got to watch this thing like a hawk if you decide to play it. And it's this. It's among one of the most talked about stocks on Reddit, aka Wall Street Bets. The same ones when you heard about more meme stocks. It doesn't mean you got to be afraid. It just means that you got to watch it closely because people are trying to get in that one and then dump it onto the market. So stay tuned, family. I got you all of the updates on this one. And if you're new here, just know we get busy. We just got into an NVIDIA 175 call option where I walk people through it, everybody, the whole family. You don't even got to understand what call options are. I'll show you from the ground up. We just made about $280 in a single day. Just quick, easy, low risk too. And then we got into Google before everybody was hyping it up. When everybody was saying that it's a monopoly and they're going to lose all of their this and that, family, and now we up another 18% on that one, easy. And then this one didn't push as high, but it was a nice profit nonetheless, and we 3 for 3. This one is Apple, which is up about $50 just from a little 2% move, family. So we learn how to use small moves in the market to multiply our gains. And I want to give a shout out to who just said this, Keenan. Thank you. I have followed your trades and I have paid for my membership on the highest level, and I'm going to be spending more time studying your classes because clearly your system works. And that's the key word. The system works. And I'm going to show you a system at the end of the video, a nice simple one that you can follow even if you decide to only follow on YouTube. I got you, family, because again, I appreciate you and I value your time and I respect it. I want to give you again the link in the description to join the team if you so choose and get my trades. Book a call with us. I have the team reach out once you book a time slot in the calendar so that we can see if there are spaces available for you to join the team. I'm looking very forward to it, family. But again, the spots fill up quick. I want to get over to open again and let you know where's the first level of support right now in case we don't come all the way down to that $3 level. And that's going to be about $3.40. If you see it come back down to $3.40, this is where a lot of volume has been happening, a lot of buying volume and a lot of pressure towards the upside. So if we come back down and test that 340 or even a 330, then this is where people are going to be buying it. So you can have your stop loss slightly under that one so you can watch it like a hawk. Just like I said, you got to pay attention, family. I'm going to put a little graphic up so you can see it. Watch it like a hawk. Make sure you pay attention. Then where would you put your stop loss on this one? In my opinion, around 290, around 295 if you got in on the low points, because you don't want the risk to overtake your reward. Let's get to a banger that's long term. And if you like the long term bangers that I bring to you, because we've been eating off of those and you've been eating with me, put an L in the chat for long term. Google is now 209. It just passed, and again, shout out to all of the Google holders, $2.5 trillion in a market cap, meaning all of the stocks added up together, family, this $2.5 trillion. That's a huge number. Shout out to Google. And you remember back in May, back in April, earlier this year, how I was just banging on the table about we got to buy Meta and we got to buy Google. Meta, that was an easy one. Google took a little bit longer to get going, but now it's getting going. And they just hit an all-time high. But they were saying back then, the fate of Google's search monopoly is now in the judge's hand. They were saying Google's a monopoly, this is a monopoly, that. And what was I doing? Buying a dip. It dip again, buying a dip. Because I was seeing that the company was getting better with artificial intelligence, with the search engine, with the users per month. All of the metrics was going up and the stock was coming down. Oh yeah, this is looking like a bargain sale. And I loaded the boat multiple times and sent out the alerts. And even still to this day, where we have the price to earnings, if you don't understand what that is, I encourage you to Google it. When you look at stocks, it helps you to compare to see what is the price of stock compared to what they earn. And is it a good value right now? And I just give you a quick tip. When you look at a tech stock and the PE, price to earnings ratio, is 30, that's generally okay. It's generally okay. Under 30 is generally considered good on profitable tech stocks. Sometimes they're higher, but even still, when they're higher, it can still be worth it if the company is growing enough. But just use that simple term for now. If it's under 30, then it's pretty good. We look at Google and the PE right now is 22. The future PE is 25. So it's still under that 30. As long as the United States government, you know how it go with the court system, let's say, if they don't ruin it for everybody by trying to break Google up, then this is going to be one that is going to really head, I'm talking sky high. But you have to make sure you understand the game and that you're willing to own a stock that's having current court troubles like Google is. But this is where I seen the opportunity and how I was able to get in and go up 18% on it, plus more in other accounts. Here's some key metrics. And I told you, if you didn't download Moomoo yet because you got Robinhood or you got Webull or you got Fidelity, I'm encouraging you right now to download Moomoo. The link is in the description. I've been telling you this for a long time, and I'm telling you to heed the call and download it so you can get information like this, where it's going to show me two things that I know you want to know. The first one is, what is the price target on this one? It's 218. Okay, Wall Street is telling you they think it's going to go up, and they've been saying that for a long time. And you know what? They were actually right this time. This one is the second thing, the fair value. According to what Google earns right now, the profit that they could keep, the revenue they could bring in, the amount of cash that they have, the brand, the artificial intelligence, the search engines, all of it, the cloud service, it's worth about $237. Oh, wait, but the stock isn't $237. That means that the price targets are telling us it's going up. The fair value is telling us it's going up. So that means Google is looking good fundamentally and technically, which is how I was able to make money on it even before Wall Street was starting to pump it up like this. Then I want to just tell you, where are some buy zones for Google? You always look for right before the institution started buying it. 205. We was loading up on this when it dipped down to the 160s, to the 180s, but 205 is still good if you are long-term on Google and you can hold it. What's long-term? I would say if you want to hold Google 3 years to 5 years, then 205 is good in my opinion. You can also dollar cost average and don't even worry about the price and just say, yo, it's Friday. I put $50 on Google every other Friday. And then that's going to help you to build wealth. And I'm telling you this, not just because it's something nice to say on the internet. I'm telling you this because it's going to be the thing that's going to take you to the next level with your investing. We always spend money on like junk food and going out to eat and drinks and things like that. How about we spend money on assets that are going to pay us and grow? Google's been growing like crazy. We use Google all of the time. Everybody we know is using Google all of the time. How about we get some money in our pockets behind it, right? It just makes sense. Now, here's that piece at the end of the video I was telling you I was going to put you up on. If Google goes over $210 and then you see it close out on the day above 210, this is what I want you to look at. I can't tell you what to buy, hold, or sell, but this is how you look at an option. You're going to go to buy Google, Googl, 215 call, 9/26, about a month out from today, to give yourself some time for this to play out. But you don't hold it all the way to the expiration. You hold it to your profit target or your stop loss. And then I'm going to get to that as well. Notice that it says the ask price is about 5.40. If you bought it at that point, this is how you think about it. It's called the 1-to-2 risk reward ratio. This is going to be some real game. I want you to actually save this video and even write this in your notes. If you get into this, you're trying to make $200, but you're only going to risk $100, meaning you're going to put your stop loss somewhere and you're going to have your eye on the profit, eye on the target of about 740. So if it goes up to 740 and you bought it at 540, you just made $200. But if it drops down to 440, then you just lost $100. So now you're using 100 risk for a potential 200 profit. Why is that important? Because you only have to be right 1 out of 3 trades when you trade like that, and you'll break even. So if you're shooting 50-50, oh, now you're going to be a profitable trader, family. This is a masterclass, quick and easy at the end of the video. Shout out to everybody who made it to the end. Hit the like button. Make sure we got 1,000 likes on this one. Join Moomoo so you can have access to this information that's helping me to knock it out the park, and book a call so you can get in with the team. The links are in the description. I'll see you on the next one, and I love y'all. Take care.